Can I rant? The Federal Reserve really thinks we're dumb, all right? They really are counting on us being dumb, but we're smart, we're woke, because we're watching this channel. In this video, I want to talk about this BS 2% inflation target that they just can't reach for whatever reason. I want to talk about like what it really means when they say they want to raise or lower interest rates. It's not as simple as you think. Maybe you think it's about just kind of setting an interest rate price, but no, it does not work that way. I also want to talk about debt because we are going to end up in debt. Your kids that are not even born yet will be paying for 2020, okay? Mark my words. So keep it locked for all that and more. It's Crystal with the Cash Compass. All right, welcome back. I am here to teach you all the things that you should have learned in school about money, but for whatever reason, they forgot to mention it. Please be sure to subscribe because we talk about everything from personal finance to investing to the economy. Let's get into it. All right, y'all. So pardon my passion, but I've just been getting really frustrated because I just feel like the masses are just so uneducated and it's really not right, okay? Let's start with the basics, okay? Inflation is not raising prices. And I heard this from the Peter Schiff podcast, which I thought he put it in a really great way. So let's just use a little bit of common sense here, okay? When you have a balloon, you inflate it, right? Does it mean it went up? No. When you inflate a balloon, it expands. And that's what inflation is. That's just a general definition. If you look at inflation right now, they might tell you it's the increase in prices, but it's not. It is the expansion of the money supply, okay? When you inflate something, it expands. So when you're saying inflation is not prices going up, prices don't expand, prices increase. So price increase is the result of inflation, which is the expansion of the money supply. Crystal, I don't care about the technicalities, okay? It now costs me $10 more to get my nails done. Why do technicalities matter? It matters because it shifts the perspective of the average American, okay? If you just think inflation is, prices are going up, you might tend to blame corporations for that. Oh, they're charging us more money for the same product or maybe even less product, and on top of that, they're not raising wages, okay? And that might be a result too. I'm not saying that that's not really happening, but inflation is caused by the Federal Reserve. If it wasn't for the Federal Reserve, we wouldn't be able to see such dramatic price increases because there wouldn't be that much money in the system to increase the price. At a certain point, we would see some restrictions, right? Like I can't charge this much because there's not that much money flowing through the system. And if we don't really think to blame the Federal Reserve, they can go on doing whatever they're doing without really making a trace in the world, right? Because the average person doesn't really care about the Federal Reserve. They don't realize that it's really the Federal Reserve that causes a lot of the trouble that we actually see today. And while we're talking about, money flowing through the economy, we already got the basic definition of inflation down pat, but they're telling us that there is no inflation. Okay, but how? If you're printing money, where is it going? The money waiting room? Is it taking a money nap? I don't think so. The money has to be going somewhere, okay? And where is it going? It's not going in savings rates because that literally fell off of a cliff. It had a spike due to literally everything being shut down, and then it's falling right down. So I wouldn't be surprised if by the end of the year, especially after Christmas, we see that just right back down to around 12, maybe even 10%. Okay, so it's not going in our savings account. Is it going into real estate? Yes, some markets are actually experiencing price increases, despite the fact that for the past 23 weeks, okay, out of the past 23 weeks, 22 of those weeks, we have had over 1 million people file for unemployment. There was only 1 week in the past 23 weeks where we didn't have 1 million people filing for unemployment. Let it sink in. So people are losing their jobs, but for whatever reason, we're having an increase in real estate prices in some markets. I think inflation is going there, or the cause of inflation is going there, right? What about the stock market? I rest my case. But the thing is, no one seems to care about inflation when it's going into the stock market and when it's going into real estate because those are things that average Americans own, right? I think something like 1 in 3 people that work have money in the stock market through their 401k. You want to see some gains, you want to see some return, so we're not going to complain. And if I purchased a house and now it's worth even more, well, it's quiet. I'm not saying anything, right? So we don't really care about that, but we seem to care, of course, when it's in your everyday items. But guess what? The inflation rate does not even calculate food and energy. So things that we actually use the most, like what we're eating, is not even really being considered when they're talking about inflation. So they're tricking people to thinking, inflation is not really going anywhere. But you're seeing food increase dramatically year over year. That's obviously a problem because we're not on the same page as far as what we would consider inflation, which is our everyday items that we purchase, and what they consider inflation, which is manipulated and changed whenever they feel like it, okay? The definition of, or how they calculate inflation has changed over the years a couple times, which is why I like using shadow stats, because they actually show you, how the government used to calculate it versus how they are now, and you can see the dramatic difference. They also do that with unemployment, so definitely check out shadow stat. Oh my god, I'm all tongue-tied. Definitely check out shadow stat. Woo, all right, let's just cut that. Definitely check out shadows. Just check the description, all right? Just check the description. And I really want to drill this point home because I think it really is super important. When they say they want inflation, and I'm referring to now just the prices going up just to make things kind of easier to understand, but that is basically just demolishing your purchasing power and making things more expensive. I don't think any of us want that, right? But the way they word it, it sounds good. Like, oh yeah, we need inflation because it's going to help with growth. Just because something turned from $1 to $2 doesn't mean we have growth, right? Growth is actually innovation. Growth should actually make things go down in price, right? Like think about bread, for example. If you had bread back in the day, it was so much more work going into it, and now we have pretty much everything kind of manufactured like to a certain, like in a factory, right? So it's much easier. So the price should go down because we have kind of made things better, made it easier to actually get these things produced. So that's real growth. Growth is actually like creating new things and actually having growth because we're being more innovative. It's not because prices are just rising. And the Federal Reserve's main tools is really just lowering interest rates and increasing the money supply. Both of those things require debt. I think when people think of, lowering the interest rate, like the federal funds rate, you think it's just a matter of, okay, it's at 2% now, let's make it at 0%. No, it does not work that way. In order for them to get the interest rates down, they have to get into debt or absorb debt out of the economy, okay? So it's really all about debt. Once they start buying up some people's debt, that brings the interest rate down because now you have another person actually supplying, the loans that you need, right? So they might take some securities, or I almost don't know how complex I want to get this video because I really want to just make some main points without kind of confusing people. But the way they increase the money supply, which is inflation, is by buying mostly government debt. They have been doing corporations, which is, again, that's a whole different video. I don't even want to get into that. Let's just keep it at government debt to keep it simple. So in order for them to increase the money supply, they don't typically just print the money and just throw it out into the system, right? At least from what we know, right? From what we know, they have to get into debt, absorbing debt, not getting into it, sorry. They have to actually absorb some debt out of the economy. So the government will be like, hey, we need a loan. Then they will print the money up and give it to the government, okay? Instead of asking us to give up the money, right? Because you could buy a bond and you can get like a return, and that's how we would kind of keep money in the system circulating. But the Federal Reserve creates new money and puts it in the system. And that's really how we get this increase in the money supply. So basically, in order to get an increase in the money supply, we have to go into more debt because they don't just print the money and give it to you as a grant. Here's some free money. No. We have to, the government, when I'm saying we, I'm talking about the government has to issue bonds that the Federal Reserve buys. It isn't that simple because the banks are right there in the middle collecting fees on each end. But again, I could predict. You guys, there's so much going on that people just don't really care to understand because it just seems sophisticated or maybe too advanced for them. But it's not. It's really, really basic. And it's just crazy how much they can do that we don't even notice. But at any rate, the bank is in the middle. They're basically, effectively, they're just buying up all the government debt. And that's how they increase the money supply. So who pays for that debt? You and I, okay? Governments don't make money. They only charge taxes. That's how they get their revenue. They don't actually build or do anything. So we are paying for this. This is why I said Joe Baby is paying for this, because these bonds can go out as long as 30 years. And even if it's a 10-year bond, they could just keep on rolling it over. So, we're paying this for decades. And I show you guys the national debt all the time. I'll do it right here just for good luck. Who's paying that? How? We can't. All right, so let's bring this full circle and say, what are the consequences of this, right? Because you might be thinking, so, all right, they printed money. Okay, whatever. Everybody else is doing it, okay? So let's kind of talk about that part. Unfortunately, from what it looks like to me, is we're just going to keep on having the middle class kind of just evaporating until we have literally the rich and the poor, okay? You think about this, like I've told you guys on previous videos that I've had, median income has remained pretty much flat in the past 2 decades, okay? We went from a median income of $30,000 to a median income of $34,000. But we have experienced much higher inflation in food, much higher inflation in home prices, okay? So basically, I just see that continuing, right? Especially with the real estate market, right? You might get priced out because the average home is like around the $400,000 range. Who's paying for that? Not people with a $33,000 median income. That's not really possible. And if you haven't lost your job, maybe you have had your wages cut, or maybe your wages are going to just stay flat because companies are just, they being a little bit stingy with their money right now. So how can we compete with all these raising prices? We're going to be priced out, and real estate is such a great tool to actually build wealth. What if you can't afford that anymore? And there's people who think, yeah, well, US dollar, we're really great. We're backed by the military. Like, we'll just kill everybody, if we can't defend our dollar. Like, our dollar is backed by the military. Okay, I'm not arguing that. Maybe it is, maybe it isn't. But that doesn't mean that the dollar as it is right now won't change, okay? And what will that mean for us and our assets? Like, what if we do go into a digital currency, which seems likely? I mean, they've been talking about it a lot more, trying to normalize it and kind of socialize it, make you a little bit more comfortable with the idea. So I wouldn't be surprised if we continue to see that, right? I mean, we really just don't know. I can't sit here and tell you that, for sure, things are over, it's in the end of the world. But the way things are lining up, it just doesn't really seem like in the future things will be exactly how they are now. We might see a whole new system, a whole new regime take over, and we have to just kind of keep on going and watching accordingly. So you guys know, I will always keep you updated. If there's any questions you guys have, please ask me, because this is really, really, really important. I want you to be able to understand this to a point where you can go and explain it to somebody. So maybe try doing that. And if you can't, then you need to figure out what portions you don't understand and either ask me or do the research. But we have to get educated, because voting is just not enough. You're voting in a broken system. Ooh, I'm getting a little hot. Let's just end it right there. So that's it. If you like this video, then please like this video and please share it. It's really important to have everybody educated, especially when it comes up to this whole, voting year. So get educated, okay? If you have nothing else going on, you know what I'm going to say. Go ahead and binge watch me. And until next time, keep your money up.